Okay, guys, let's talk about private wealth managers. And is it true that wealthy investors get access to better investing opportunities than your average investor? And what prompted this question was Moise Ali had a tweet that went kind of viral here where he was talking about how he worked with 3 different private wealth managers over the past few years, including Goldman, which Trav, I think you used to work at in your early in your investor career. And he says, to date, I can say that they have provided virtually no value in growing my net worth, and they are structured against success. And the idea that they are going to link you up with unique advisors who will be helpful is BS. Do you guys agree with this? I've got a multi-decade professional investor who comes from the hedge fund world, and we've got a financial advisor and certified financial planner over here. What do you guys think?
You can start, Trav, since you came from Goldman.
Well, I think I more agree with him than disagree with him here, because I have seen a lot of situations where private wealth managers didn't add any value. That also goes, you could kind of group this in also with RIAs or financial advisors. Again, you have a very wide range here from, smaller accounts at a place like, say, Charles Schwab, all the way up to like hundreds of millions of dollars or billions of dollars managed by divisions at Goldman or some of the big brokers like that. And so it really depends on who you are. Like if you're Michael Dell, yes, you're getting access to pretty unique investments. You're probably getting to invest in LBOs or, even some of the special situations that come across the desks at Goldman that can be very good investments and, amazing investments in some cases.
What's an LBO for people that don't know?
Leverage buyout. So, essentially you could invest in private equity deals. You could get access to, your top tier, your top decile of VC or private equity firms, just because you have significant capital and they're looking for significant capital to come in the door. So those types of individuals, yes, will benefit from, and I can tell you, even though I didn't work in the private wealth division at Goldman, I was on the sales and trading side, but I had friends who did, and there are those individuals that have direct access to management at Goldman and places like that. And so, one phone call and you can pretty much get a look at any deal you want. So, Elon Musk decides he wants to take Twitter private and he wants other investors to co-invest. Yeah, you could probably get access to that deal if you're a billionaire. If you're someone who has $1 million or $5 million even, and you're in the private wealth umbrella at a Goldman or a Merrill Lynch or somewhere like that, you're not going to get access to those types of deals. You will get access to some of their bespoke funds, some of their private deals, private lending deals, things like that, the quality of which varies dramatically. Like some of those are going to be terrible funds. We saw during the financial crisis, some of those funds blew up. They were over leveraged or invested in just absolutely toxic products. And so people lost their life savings in some of those vehicles. Then there's some that are barely beating or not beating the S&P 500. So it's like, why am I paying 1% a year? And in fact, that's probably the most common case. And that's why I think people like Moise are frustrated with a lot of the private wealth managers, because it's like, if I just was in NASDAQ or S&P for 10 or 20 years, I would have done way better than, especially after fees, than being with a private wealth manager. So I think there are people that should be looking and scrutinizing their statements and saying, is it worth the fees I'm paying? But then there's another aspect to this, which is, okay, what else besides the investing side are you getting? Because there is often other services, whether it's estate planning, tax strategies, structuring things for, legal purposes to reduce legal liabilities. And those could be value add. But again, it may also depend on how large your assets are and whether or not you can actually get access to those services for a reasonable price. So unfortunately, I'd have to say it depends, but I think I would agree mostly with what Moise is saying here.
So it sounds like the theme is access to more and even more complicated investment opportunities doesn't necessarily mean better performance, especially if you're passive and you're not an active investor like us and you're just looking for somebody to tell you what to do. If there's an opportunity that comes up, doesn't necessarily mean it's going to be a high probability of great returns. It, like you said, it could blow up. It could just be some overpriced, complicated bullshit opportunity, right?
Yeah. And unfortunately, at a lot of wealth management places, the people handling accounts are really not well trained in spotting good investments. They're not focused on investing. They're focused on the sales process. And so they're focused on asset gathering and getting as many assets in the door and having lunches with rich people, trying to get them to come under their umbrella because they'll make more money that way. So that's something you have to watch out for. I will say, there's even variation within firms. If you go to a big firm like Merrill Lynch or Goldman Sachs, some advisors are going to be really great and they'll hold your hand and they'll help you if you have a question, and you can call them anytime and they'll give you insights. And then others, will just kind of generically spit back whatever was said on CNBC that day, or tell you, oh, you should buy tech because tech's been going up the last 3 years, right? I mean, it differs wildly depending on the individual person who's handling your account sometimes.
Yeah. And Nick, I think in the investment world, you see people coming to you that have just been sold things from salespeople, essentially, right?
Yeah, I mean, I just had a prospect call the other day, and the advisor that they were gonna go with this advisor, but all the advisor wanted to do was sell them an annuity. And it's like, you see that a lot. And after talking to them, it was like, that's, that doesn't sound like the best fit for your situation.
Yeah.
But, this is the unfortunate part about this whole industry in general, is there's this big debate of like, are advisors crap or not? And it's so hard because every advisor is so different. And I feel bad for consumers. I feel bad for consumers that are trying to find an advisor, because everybody you talk to is going to have a different approach, different value prop, different investment style, different just with the way that they look at things or the way that they don't look at things. Some do tax, review your tax returns, some don't. And the people that I mostly talk to, they're getting charged 1% for just somebody to manage their assets. They're not getting anything except somebody putting them in a very overcomplicated portfolio. Can confirm.
Yes.
I looked at this portfolio the other day and I was like, what is going on here? This is chaos. It's chaos. It's a core and satellite portfolio, but it's chaotic and it's not properly, allocated for the client, and it's just a mess. And I'm like, you're not getting no one reviewed your tax return. Nobody talked estate planning with you. Nobody looked at cash flow planning with you. And so that's really the issue. And I think that advisors that are doing that are becoming more vocal, because they're like, hey, yes, our fee is 1%, but here's everything you're going to get. We're not just managing your portfolio. We are doing a whole comprehensive overhaul of your entire financial life. And that is a very different story from someone that's like this, just trying to grow their portfolio, right?
Yeah. I think people don't really understand the difference between a salesperson who's selling insurance or annuities or even investment opportunities, or a stockbroker, and like a fiduciary or somebody that actually does like a holistic approach.
Yeah.
Right. There's a big difference between just being a financial advisor and like sticking you in a fund, and somebody who looks at the entire thing and finds tax deductions and stuff. So I saw here in the replies, like some people were chiming in and, saying like, you're doing it wrong. A good wealth manager knows about advanced planning, like estate, tax, philanthropic, cash flow, investment plan. Like there's a whole lot of stuff that goes into a complete financial plan.
Yeah.
But if you're just looking for yield, right? If you're just looking for better returns, and maybe you're a little more of a sophisticated investor, maybe it makes sense to kind of be active and manage it yourself, or seek out private investment opportunities yourself.
Yeah, and it sounds like what this person is saying is like they were looking for they went through 3 different wealth managers in 5 years, which is, a lot. A lot of times you want to stick with somebody, make sure they're fit or not, but a lot of people don't know well enough to look at an investing strategy and say, this is good for me or not. Like, that's why they hired you. So they don't know any better. So they're just rotating wealth advisors based on how their portfolio is growing or not growing, which is not necessarily a good thing to do because investing strategies can take time, unless you know what you're doing to be able to pick it apart yourself, which is what we teach people how to do in the community. But I think that if this person was just looking for portfolio growth, then yeah, they're going to have Goldman's private investments, you're not growing very quickly with that necessarily. Like, that shit takes time. Startup investing, all of these alternative investments, hedge funds, things like that this guy probably wants his Goldman Sachs wealth manager to get him in. That stuff takes time too, and you're not going to necessarily see that ROI right away because private investments, like with ACE,
minimum 5 to 7 years.
You guys have invested with private, startups and stuff, and that it takes years, decades for some of these things to take off and show you an actual, positive wealth accumulation trend. So I don't know. I think that's the problem with this tweet is that it's kind of sending the wrong. I agree, but I also think that it's kind of sending the wrong message that when you're looking for somebody to help you manage your money, it's way beyond just their portfolio. It's what else are they doing for you, especially at ultra high net worth levels. They need intense estate planning.
Yeah.
I mean, ultra high net worth individuals that are going to get these types of investments that he's talking about, they are trying to figure out how to give away their assets. They're trying to figure out how to gift into different trusts.
Yep.
And if, getting in a hedge fund and a private and startup investing is great, but what are you going to do about this estate tax issue that you're going to have? Who's going to help you with that? So,
Well said.
I don't know. There's a lot that goes into it.
Here.
Yeah.
Any final thoughts?
Hire a good certified financial planner.
I could get on a soapbox.
Yeah.